India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, inching towards the 20th of January, Trump inauguration. 2 days to go for the week. This is a Thursday morning. We are coming to you as always from the CNBC TV 18 Motilal Oswal studios. It is looking much better with the overnight cues suggesting a bit of a risk on. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning folks. Well, yes, plenty of green across global screens, some good news coming in. And the best news really is in the Middle East. Finally, it seems we have a ceasefire in place.
Yeah.
After so many months, and so many lives lost. But it seems that it's phased out. It's in 3 different stages. First stage, aid flows into Gaza, hostages are released. So good news.
Well, that's right. Good news for humanity. And in fact, the other big point is, has Trump peaked out? Has the Trump factor peaked out getting into that 20th? Well, we'll know in a couple of days from now. But it appears, at least as of now, post all the exuberance that Trump is coming, dollar index shooting up, yields moving up, I think some kind of sanity's come back. So pretty good times, I think.
Absolutely.
So.
And I think markets are swinging like, what do you call it? A drunk sailor. Too early for that, But I think you got big moves coming through, one way or the other. They're big, down and up and down. But as we've been saying, leading up to the 20th of January, it is going to be volatile. But this was not the last night's move was nothing to do with what Trump or expectations around Trump. It was pure hard data. So you essentially had the NFP, the jobs data last Friday, which triggered this big fear that rate cuts, etc., are off the table and markets plunged. Well, markets are reignited after cooler than expected US CPI print, which came last night. So the number actually, the core CPI, rose 0.225% month on month in December. This is this is the unrounded figure. Now, the reaction in equities and rates and dollar, etc., was pronounced. S&P was up 1.8, Nasdaq 2.5 higher. Russell was up about almost 2% as well. That entire tech complex, Tesla was up 8%, but, so many others, Amazon, etc. The entire large cap tech names in the US, outsized influence, of course, across all indices. VIX fell about 14% to about 16.12. So that's the fear gauge volatility, the CBOE VIX, which fell about 14% or so. Now, the 10-year yield, actually, it's not just the 10-year. You look at the 2-year, 5-year, 10-year, 30-year, everywhere there was a sharp decline there. So the 10-year fell about 14 basis points to 4.65. Remember, yesterday, when we were talking about this, actually, in the previous session, the US 10-year had reached 4.8. So from 4 and left off at about 4.77. From 4.8, it's now down to about 4.65. That's really big moves. If this number had actually come in hotter, 5 was possible, but we've gone the other way. Dollar index has slipped to about 109 odd levels or so, and this is essentially where things are. Consequently, Fed cut pricing firmed up to about 39 basis points now compared to 29 basis points before CPI. The interesting thing is markets are not really sure when to distribute these rate cuts. When will these cuts actually happen? Will it be in May? Will it be in June? Will it be in July? But confidence that there will be rate cuts has probably gone up a little bit. So at least 125 basis point cut will be seen by July. Let's put it that way. That's the confidence that markets have gotten. More conviction rather than confidence after the numbers. Now, oil prices is the other bit, which went up about 3% or so. 82.47 as far as the Brent oil price is concerned. And we'll talk more about this because oil's been a little bouncy. US retail sales data will be important and interesting. That's, of course, later, and we'll track it as it comes out. Now, just to tie in the levels, the downside levels are pretty clear as we've put out. You basically just got to look at the Monday lows for the Nifty and for the Nifty Bank as well. But we are bouncing a little bit, and we got help from global markets, so you should look up and see what can happen. Now, resistance for the Nifty comes in at the 40 hourly. We put the 20 and the 40. 20 is conquered now, and 40 is in sight. So 23,347 is the first resistance. And then the daily averages come into play. which is so far looking at the hourly, but daily, perhaps 23,672 is the 20-day moving average. For the Nifty Bank, similarly, which, by the way, was the first of the two indices to cross the 20, the 40 comes in, the 40 hourly comes in at 49,023. I mean, I think that should get done if the GIFT Nifty open holds. And of course, after that, multiple resistances between 49,310 to 49,850. So those are levels. And I said on the downside, levels are clear. GIFT Nifty should come up on your screen indicating how we're likely to start. It's about 130 odd points higher. I just want to say one thing. While it's looking good and it's looking solid in terms of the handover from Wall Street, and, I've made this point last 2 days now that, once Trump is in the saddle in the White House, he's going to be bound by office, and he probably will not do all the things he said he will. Some form of it, maybe, but at a lower level. Although people like Jahangir Aziz, who was with us yesterday, disagrees. He says we should take Trump literally. Although he said, well, I hope I'm wrong. But the point is, between now and just 2 days now, and actually 3, because Monday late night, of course, is going to be the swearing in, or in the evening or whatever. So Tuesday morning, you'll get the full reaction and executive orders, etc. But it's going to be volatile, and there will be, people will have doubts again. There'll be more statements which will be made. So it's going to be a volatile environment, at least for the next 3 days. So if that's your time frame, then, chasing is not a good idea. And you're better off just sort of, waiting on the sidelines. Individual stocks, of course, as we will continue to discuss, is a different story. And there is a lot happening there as well. Surabhi.
Oh, absolutely. Big headlines coming in. And it's very, very clear. It seems that, even President Biden, as he goes out, he wants to leave a mark. He wants to be remembered. And I think maybe the fact that this ceasefire deal finally has come through, perhaps there was some added pressure to do it before. In fact, the first phase starts rolling in on the 19th itself, his last day in office, which is when aid, rolls back into Gaza after 14 to 15 very, very difficult months. Anyway, to talk about markets over here, yesterday's Wall Street party was based on two key pivots. One was the softer than expected inflation report that came in, and the second was blowout bank earnings. On inflation, we've kind of mentioned that point. The CPI number was 2.9%. The market latched on to the fact that core CPI actually fell a little bit more than anticipated. It was 3.2%, and it was a little lower than expectations. So that really worked very well. And then we had the reaction play out in yields, in equities, in the dollar, so on and so forth. The dollar index, by the way, is now at just about 109, just a notch above 109. Imagine, just a couple of days back, it was roaring above 110. So big cool off over there. On the bank earnings, we've got massive reactions. I mean, look at how stocks have moved. Wells Fargo, Citi, and Goldman Sachs rallied 6 to 7% on pretty solid, earnings prints coming through for all of them. JP Morgan was up 2%. JP Morgan's profit has soared 50% in the December quarter, and all of their engines have been firing, whether it's bond trading, equities, whether it's investment banking is up, I think, 45% or so. It's been a fantastic December for the large U.S. banks. In fact, more of them would report today. Morgan Stanley and Bank of America are the ones that report numbers today, so we'll watch out for that. In addition, Scott Bessent is supposed to speak before the Senate Committee on Finance, and the markets, as usual, will hold on to every single word to understand any cues on tariffs, what they're thinking. Remember, he said there is the IRS internally, and there should be the external revenue service as well. So you collect more money in the form of tariffs. So let's see what we get from the man who is supposed to take over as Treasury Secretary in the new administration. Moving on to Asia, markets are really latching on to all this positivity from Wall Street. So there's a broad sea of red, gains anywhere between 1% to 1.5%. Quick data points. In South Korea, there's a bit of a surprise. The central bank was supposed to cut rates by 25 basis points, considering how growth has been, faltering. But they didn't do that today. So no rate cuts in South Korea this morning. In Japan, inflation continues to be a concerning point. Producer prices are up 3.8% in December. And remember, this is the other watch point for global markets, whether the Bank of Japan will go back on its hiking path. It's been on pause, trying to understand what's happening with the Fed in the U.S. election. So that's a cue for the BOJ when it meets later. We've discussed, of course, the ceasefire. That has had its impact on the oil markets as well. Oil had a massive upbid yesterday because of the drawdown in U.S. crude stocks. U.S. crude inventories are at the lowest level since 2022. But then the ceasefire news came in and very quickly crude cooled off. It touched 82, that's Brent, and then cooled from that level. So that's good news for us, at least from the oil markets, considering that there's a bit of a, unwind of that long trade. For the Nifty, the challenge is, can the market go beyond sell the rally? Yesterday was all about sell the rally, at least at an index level. Let's see if that changes today, now that we have far more supportive global cues. What's not supportive, obviously, is the FPI flow situation. Again, we had a sell figure yesterday, about 4,500 crores worth of cash market equity sales from FPIs yesterday. Domestic buying didn't exactly sort of negate the entire amount of it, but for what it's worth, we managed some green on the screen. It's going to be a lot about individual stocks. Remember, earnings season is in full gear. You'll hear more about, L&T Technology Services. Decent numbers and very fantastic performance on margins, sounding good in terms of deal pipeline as well. HDFC Life's numbers are very good. Remember, they've dealt with so many regulatory changes in terms of the surrender value and so many other sort of changes that have happened. But they've managed a very smart increase in VNB margin. We'll talk about this. CAT's numbers are not that great. A big fall in margins, nothing great on the top line to report as well. So watch out for these stocks. Today's biggies: Reliance Industries, Infosys, there's Axis Bank, and there's LTI Mindtree. So plenty to keep us busy. And let's see if the markets get a bit of a leg up, because on Reliance, I think there's a lot of hope building that something better is coming in the next few quarters. So let's see if we get some hint of that in these big earnings today.
Well, that's right. And overnight we had the CBOE volatility index that cooled off 13%, and that's normally music to the ears of bulls. Well, let's take a look at the top three indicators as we normally do. Well, 2 out of the 3 actually moved in our favor. That's the 10-year yields. Well, they cooled off, and the dollar index as well cooled off. Brent crude prices, as you all mentioned, that's perked up a little bit because of the sharper than expected draw in the United States, as well as the sanctions on Russia that could limit supply. So that's why, in fact, that's not moved in favor. But the other 2 out of 3 have moved in favor. Now, you're moving to what the FIs did in yesterday's trading session. Very, very measly shorts got covered out. The longs got added as well, but they continue to remain net short on the index. And if you look at the positioning as of now, the clients, well, they are net long on the index. The FIs, they are net short on the index. But on the stock futures, both of them, they are on the same page. So both of them, they continue to remain net long on stock futures, while on index futures, as I mentioned, both of them on extreme ends. The point is that big short covering bounce is still due, because we haven't yet seen it, going by the number of contracts they have on the short side. So you like the market to trend up a little bit and then, in fact, get the short squeezed out of the system. It's a big day of earnings, actually. You'll have 18% of the Nifty that will be reporting its numbers later today. Most of them will be post-market as, but that's going to be a big queue. And stocks like Reliance Industries have already underperformed. So is the risk on the upside? Could we get a positive surprise out there? Infosys as well, up close to around 0.5% in trade yesterday. This big boy can drive the IT index, while Axis Bank went soft into its number. So there is bad news. How much of it is in the price? We'll have to keep an eye out on all these 3 names. But the options data suggests that the bulls, well, they are a little bit skeptical, but the bears, well, they are getting very confident. 23,200 call, 23,250 call, both of them were very, very active in yesterday's trading session. In fact, between both of them, a crore shares were added. That's telling you that the crucial resistance mark come out here. 23,350, the bulls will like to get to this particular level, and support level, the recent reference of around 23,000 odd. Very, very crucial factor. Remember, today is the weekly expiry. So the bulls need to take the bails out. Well, today could be that day. It's as good a day as any to see a big short covering bounce play out. The Nifty Bank, well, we'll be mentioning this, that it was making lower highs. Yesterday, it made a wee bit of a higher high. So this is the level you'll want the Nifty Bank to cross in today's trade. The indices that I'll be looking at, since the dollar index has cooled off a little bit, tech as well as the metal index, we'll keep an eye out on both those two. And a few stocks have moved into the F&O band. We've seen sometimes these stocks move quite violently. So we'll keep an eye out on all these names. Kalyan Jewellers as well, massive open interest build up. Keep an eye out on all these 3 names for trade today.
Okay, all right, got that. Thanks very much, Nigel, for all of the cues. Of course, we are going to keep an eye on all of those individual stocks and the market levels as well. But for the time